Good morning, everyone. My name is Mike Haltman. I am the CEO of Hallmark Abstract Service. We provide title insurance for residential and commercial real estate transactions in New York. And because of that, a vibrant, liquid, active real estate market is important for our business as it is for a lot of businesses, real estate attorneys, real estate agents, mortgage brokers, and a lot of other professions as well. We've had a little bit of a cross current in the market, and it's been lasting for a little while now. And that's when the Fed cuts rates, and yet intermediate and long-term bond yields rise. Now, we have published a very exciting article today, really looking at the fact that despite what the Fed does, it really is for the real estate market, for mortgage rates, it depends what the bond market thinks, not the Federal Reserve. The bond market is what's called the smart money, and the smart money is looking at the market right now with an eye towards the fact that there may be a couple of issues here and there. One is our incredibly large debt, federal debt that's approaching $40 trillion. The debt service every year is approaching $1 trillion. The budget this year is they're looking to grow that, and another issue are our budget deficits, which the bond market just doesn't like. And then you add on top of all of that inflation. The Fed has a dual mandate, battling inflation and battling interest rates, and battling full employment, and inflation is winning out right now. And crude oil prices, as we know, due to the activity in Iran, have spiked. It's an issue. So when you look at this chart, the Fed now is in a little bit of a corner. They may not lower rates anymore for a while. They may actually raise rates for a while, and a lot of that's going to depend on what goes on in the Middle East. The worst case scenario, and we've written about this before, is stagflation, where the economy goes into a recession while at the same time inflation is an issue. That happened during the 70s, during the oil spike then. So if you're interested in just reading more about how and why mortgage rates happen, how and why federal interest rates drop on the short end, may rise on the long end, the article link is in the description below. Read it. If you have any questions, please let me know. And, if you have any ideas for other articles that you'd like to see describing other issues, I have a long background in the bond market, in the equity market, in the commercial real estate lending market. So, please let me know if you have any questions, any thoughts, any opinions, and I would love to hear more. So this is Mike Haltman, Hallmark Abstract Service, and remember that when you buy real estate, we protect it.